Hello, and welcome to a new episode from the Markets Middleman. Today is Tuesday, June 23rd, and I'm about to share with you my preparations going into this week, which is starting with a lot of action after the last weekly close from the DXY today. And this week, the market is looking on fire, and there's a lot of action that is going on. So as you can see from the title, my list is a little bit longer than usual, covering new assets, and simply because I think that there's a lot of big potential for a great opportunity during this week. So without further ado, let's go ahead and see what DXY is showing us. The driver of all of those markets is the DXY, and what last week after the FOMC statement confirmed a weekly close above the previous buy side, which marked another bullish break of structure, which was just a matter of time really after price took this level as a base after closing above this previous buy side, marking the first bullish change of character after 1 year of consolidation. Right now we are witnessing the breakout of this range. So where price can go from here, the levels, the areas, the key point of interest, I'm going to discuss all of this moving forward. So on the weekly time frame, we clearly see how this week closed well above this buy side. This opens the target to take out the monthly fair value gap, as well as this is the medium to short term target, as well as the long term target, or maybe probably still medium term target, is the weekly order block aligning with the fair value gap over here. So as you can see within the select to the downside, okay, this is the only up closing candle specifically after this push to the downside. This is the only up closing candle, which is a weekly order block nested just at a weekly fair value gap. So this is still early a little bit, but I'm mentioning this to show you that there's really a huge potential to the upside, and especially if we zoom out a little bit, we see that the DXY had been in an uptrend since a very long time. So right now, are we witnessing a breakout of this range? Yes. Had we confirmed the breakout? Of course, yes, but we never know when and if price is gonna target those levels, because at any time things can change. But the medium target or the short term target is the monthly fair value gap, or on the weekly it's perceived as a buy side, and the medium to long term target is the weekly order block. Now moving into the daily time frame, I mean the momentum here is still very strong. Okay, previously I thought that maybe during this week we're gonna have a retrace into this daily imbalance, but the market said that not today, not this time, and maybe not at all. But what I see right now is that Monday created an internal range within Friday's trading price, but now Tuesday is closing or needs 5 hours to close, but as long as the daily is well above Friday high, this is another break of structure to the upside. So the plan for next day, which is tomorrow, is simply waiting for a retracement and a continuation to the upside. This is still gonna be the plan as long as we are seeing bullish break of structure. Now, unless we see on the hourly time frame a change of character or closing well below a previous sell side, then we're gonna consider a retracement. You notice this daily order block I've noted over here, because later on, if price kept on going up, at the end of the day, price will actually start retracing. So this is just a mark for me, or a level that I'm gonna keep an eye on. Even in the upcoming 2 days, if I see price retracing lower, of course I have this daily fair value gap aligning with the breaker. It depends on what price is showing me, but I have this daily order block over here just in case I see any kind of manipulation to the downside. Now, here where it matters the most, because all of those analysis and long-term projection, if you don't have a way to capitalize within a tradable setup, it doesn't matter. At the end of the day, you need to translate this idea into an actual setup. So, moving into the 4-hour time frame, let's put a low over here as the last protected low. So, price is gonna still be bullish as long as it's trading well above this low over here. Why this low specifically? Because you see this was the last internal low, break of structure to the upside, then another internal low, break of structure to the upside. So the low between this high and this high is the protected low. So even though I see something like this, maybe violating this 4-hour fair value gap, then I'm gonna still be bullish on price. But for now, you can take this as a reference. You can take the displacement from today as a reference, and this 4-hour fair value gap aligning with this previous buy side is a good place for me to observe whether we're going to have a potential accumulation, manipulation, and then still another continuation to the upside. So on the lower time frame, I'm going to be perceiving or observing, sorry, for any potential change of character for the continuation until today's high. So I'm going to keep this in mind. If this level fails, then I'm not gonna flip bearish yet. I'm gonna wait for the daily order block slash the daily fair value gap. Now this protected low is a daily fair value gap, so price can still go lower, tap into the daily fair value gap, and then continue higher. But I don't want to assume here, okay? But at some point, there's two ways to think about it. Either price is very aggressive and you're going to accept any small kind of retracement just to follow up with the trend because there's really no reason for you not to. Or you can perceive this as price is too high and I'm going to wait for a major retracement to the downside. And I mean, this eventually will happen because this is how the market works, right? They work in waves. So regardless how long or how far price would go, eventually we can see something like this. Price can still keep on going up until it sweeps the monthly fair value gap slash the buy side liquidity, and then we're gonna see a sell-off marking the first change of character. So there's really nothing to change over here as long as the trend is strongly intact. So with that being said, on the DXY, this is the protected low again, daily order block and 4-hour fair value gap. This is an internal range that you can work with during tomorrow or pretty much for the rest of the week, as long as we are seeing another break of structure. Let's assume that price is going to dip lower, another break of structure, then this becomes the protected low again and again and again until you see a breakdown of the structure. Just make sure you are not trapped within a fake move to the downside because price is still aggressively bullish. Now moving forward into EU. EU is the inverse of DXY. So if we're breaking out from a 1-year range on DXY, there's no difference on EU. So today is marking a very big confirmation. If today manages to close below the sell side already, which was the last low created before the market retraced higher, which is right now trading well below. So I would be really surprised if today before the market closed, the daily closed above. But let's assume the day will close below this sell side specifically. This will mark the next bearish change of, bearish break of structure. And this is very important because this was the first initial external leg to the downside, which changed the character as bearish, broke the structure to the downside. And this was the reason why we are bearish on EU, especially after sweeping this buy side over here. So we're talking about the very biggest time frames, which is the monthly, weekly, and the daily time frame. So market retraced back, filled out all of this gap over here, swept the buy side, and just kept on going down pretty much aggressively. So today would mark a bearish break of structure, which can open up the targets to keep on going down, okay, as long as the trend is intact. The trend is your friend. So there's still there's still a significant room to the downside to take out this sell side over here slash this sell side, and the medium to long term plan is the weekly order block, just like the DXY. So I will just jump quickly to the weekly time frame. This was the only down closing candle within this upward movement and aligning also with the bullish fair value gap. This is where I see EU trading within 2026. I think this is going to be the prices that we're going to see within 2026. So once you get the bias, of course, internally on the lower time frame, within this push to the downside, there will be some relief rallies and you could be going long. But when you have the overall trend, which is lower lows and lower highs, eventually we're going to see price trading around those levels as long as the bearish momentum is intact. So once you have the bias set from the higher time frame, it becomes simple and easier for you to trade within the overall bias. Now the same thing, I've set this daily order block over here. Probably we're going to have like another couple of bearish days. So this becomes either a bearish fair value gap, or this would be, let's say, the only ordered block up closing candle within this push to the downside. So once I see a retracement into this daily order block, I'm going to be looking for shorts to continue the push to the downside. Now again, aligning this with a tradable setup, something that you can actually work tomorrow, like right on the spot after you watch this video. You want something practical, you want to see or observe a setup that would actually work right on spot. Not necessarily on spot, but I mean as a preparation for you moving into tomorrow's trading session. And just to make sure that you all guys watching this video know that all of this is just my opinion and for educational purposes only. This is never intended to be as a financial advice. So moving forward, I have set this 1 hour bearish fair value gap with the 1 hour order block. And I'm taking this as the last independent displacement, and this is the protected high. So for price to be bullish, it needs a lot of action. You need to take out this high. And why this high? Because this is still the last external high created before price pushed below this low over here. So we're still having bearish break of structure. This was the protected high. This is why on Friday it was just like a relief, more than price couldn't actually confirmed bullish by not closing above this buy side over here. So I had a short idea from yesterday, but unfortunately I got stopped out on the wick over here. So I entered on a 15 minutes bearish fair value gap after this break of structure over here, and I have been taken out by this buy side over here. So that's normal. That's trading. Of course, I could have set my stop loss a little bit higher, but I was anticipating that this was the protected high. So more about this on the trade recap that I'm gonna do at the end of this week. But moving forward, I have set this 1 hour order block with the 1 hour bearish fair value gap. So tomorrow, what I'm gonna be perceiving is the following. I'm gonna wait for a potential correction to the upside, tapping into this area over here, and then I want to see on the lower time frame a change in market structure, displacement with the fair value gap, and probably I'm going to be targeting the low of today. Maybe in extension, if I see that the 1 hour time frame is showing nice bearish momentum, I would be targeting the extension or the 27 fib extension. I usually use this for potential as a target. So if you take this high over here to this low, you'll have the 50% nested or engineered at this 1 hour order block. Of course, if this trend continued to push to the downside, I would still have the same structure. Probably we're going to have something like this, then a retracement back into the 50% and a continuation lower into the 27 fib extension. Right now, let's keep it like this. So yeah, this is a setup that you can actually perceive. Of course, if I see price just rotate higher, again, I have this daily order block here because this is going to be the protected high. So at this level, I'm going to be trading at the optimal, at the OTE, optimal trade entry. So over here, still price can still resume bearish and continue to the downside. So again, this is a setup that you can wait for during tomorrow's session. Moving forward into GU, there's no need to talk about bias because it's clearly how price got out of this range and closed aggressively below the sell side, marking a bearish break of structure and not reaching this sell side as yet. But overall, the GU has the tendency to take out this low. So if I get back a little bit, price created a swing high and swing low, raided the highs, and right now the objective is probably to raid the lows. So it's a little bit early to talk about lower targets for GU because it's still maintaining more than EU. But eventually, if today close below this bullish order block, then I'm going to be looking, let's say tomorrow closes well below this sell side, marking a bearish break of structure, then I'm going to be waiting for a retracement into this daily order block for a continuation lower into this sell side and this sell side coming from November 2025. Now there's one thing I want to show you as well, which is on the 4-hour time frame. So you see, this was a bull trap coming from Monday. So Monday made a bull trap. It trapped everyone that the market is bullish. But I'm going to show you why I wasn't bullish on GU. Simply because this was the high, this was the last low, and this was the low created. So this was the protected high. So if price closed above this high, then I will consider that bias shifted into bullish. But price just retraced almost 61% from this level, tapped into an 8-hour bearish fair value gap and continued lower. Now I wanted to see a sweep for Monday's high, but unfortunately this didn't happen. I even today had an idea to short the markets off of this 3 hours order block, but also this candle couldn't manage to reach this level and I just did nothing. So again, this is the consolidation, okay? Another break of structure. I would still need to see a little bit of a more push to the downside from GU just to give me an edge shorting right at this breaker over here. And for the targets, there's plenty of room to the downside. So this is going to be the playbook for GU. I still don't have something ready, but this is the objective. I give you the objective and you can trade it by yourself only if you see something aligning with the overall structure. Now moving forward into gold, there's really something interesting going on. If you remember from last week, I spoke about the potential. If we see bearish DXY, then I thought back then that maybe probably if we see a break of structure to the upside and a bearish DXY, hence we're gonna see a retracement back into a weekly order block. But this didn't happen, and I made sure to make you aware not to be trapped if you see price going higher. So if you can see price swept previous weekly high, created the buy side on Monday, swept it on Wednesday during the news, just before the news in a little bit, and then pushed to the downside. So it inverted this bullish daily fair value gap. Price was very shallow, very weak to test this inverse daily fair value gap again. So move forward, I will remind you why I'm still bearish on gold simply because of this daily close below the sell side. But of course, this is not for you to short from here. This is for you to see that this is the protected high, this is the protected, sorry, this is the low, and price retraced back almost 61 Fibo level and then for a continuation to the downside. And overall, this is the monthly fair value gap that I'm eyeing for gold to balance during the upcoming few months. So this is quarter two finishing right now. When we're gonna see this retracement, I don't know, but I think it's gonna be soon. So this is why I'm still heavily bearish on gold, because there's really no reason not to be bearish on gold. And if you're trying to long gold, I think, in my opinion, you're really making a big mistake. Of course, if you are longing gold on the higher time frame, but if you are intraday taking small, short term long position, then it's up to you and your strategy. But what I think is happening right now on gold is the following. I have set this level over here. Okay, as you can see, first, it's worth mentioning what happened last week. Look at this one candle, okay? Just before the news, it swept this buy side, convincing everyone that price is bullish, and then we saw a very sharp bearish change of character closing below this protected low, then retracement back into the breaker, like really textbook example for a reversal, and then a continuation to the downside. Then price created the sell side, broke the structure to the downside, retraced back into it, failed to take the inverse daily fair value gap, and today, or sorry, during yesterday, we saw, sorry, during today actually, we saw another bearish break of structure to the downside. So what is this level over here? This level is the 12-hour order block. Okay, so this is the 12-hour order block. What I'm anticipating right now after the close of today, it's going to be a bearish fair value gap as well. So I'm going to be waiting for a potential manipulation to the upside and a continuation to take this sell side at least from gold. So on the 1 hour time frame, it becomes like this. Price is currently correcting. I like how it's correcting because it couldn't make a breaker, and if it corrects, it's bullish. No, if actually, even though if it goes back up to this level, price is still heavily bearish. So I'm going to be waiting for a potential still manipulation to the upside, covering this bearish fair value gap, aligning with this inverse over here and the weekly open and the 12-hour order block. So this is really significant level for gold to take a small confirmation on the lower time frame for a potential continuation into this sell side. Of course, if I see the 1 hour closing like this and taking out this high, still I'm not going to flip bullish, but I'm going to take into consideration that price is correcting all of this wave to the downside, probably at the 50% Fibo level of this wave. So I'm going to perceive this as a full displacement to the downside with a potential correction and the continuation to the downside. But I think with how the market is going, even if we see this level, would be more than enough for gold to continue lower. Now, one thing I also want to mention, if we don't see this level taken, I'm not going to do anything, but I just want to see a full displacement to the downside, and this breaker on the 1 hour becomes my area of interest just to take a short-term short into this sell side over here. Because as I see right now, price could potentially close below this low, take it as a breaker, and just push even lower. So this is the game plan for me on gold. There's no reason to flip bullish yet, and if you're trying to bullish to bullish gold, to go long on gold, I think it's very early to do so. Now, this is the new asset that I don't usually talk about, and honestly, I don't actually trade the S&P 500 or the Nasdaq unless when it comes for a setup on the higher time frame and I have like a really good conviction, then I diversify a little bit and I trade those assets. So I'm not gonna talk much about the stock market and how it influenced the whole economy, but one thing I know is that structure never lies. And if the structure and the price is telling me something, I need to follow what the price is showing me. So if you see that the S&P had been in an obvious uptrend, and especially on the weekly time frame, after the war situation and the market was selling off, it reached a very critical level on the weekly time frame. Guys, this is never random. With all of the updates, the ceasefire, the war resuming, like what the S&P 500 was doing is just retracing back into a weekly fair value gap, and it's never random why price kicked off from this level, even before a peace deal or anything like that. This is why when it comes to trading, me personally, and this is just my opinion, and I'm saying this publicly, I really don't get into the noise of the news, because at the end of the day, price can tell me everything I want. There's a quote I like from another trader that says, price knows the known and unknown truth about any asset. So if there's gonna still be a peace deal, right here you might be thinking that the war is gonna go forever. And only when price reaches such levels, you see that okay, oh okay, now right now the peace deal is gonna be confirmed. So this is why always make sure what are you consuming from the median. And my personal advice, not to mix it with the asset that you're trading. Always listen to the price. So if I want to listen to price right now, what does the price saying right now currently at this moment? What it's saying is that the following. There's a huge weekly imbalance aligning with this liquidity which lasted for months from October since February. And probably after this sell-off on the weekly time frame, it could be time for a correction to the downside, just like what happened over here, and just like what always happens in the stock market, which is healthy. Okay, it's actually healthy for price to retrace down because this market cannot go up forever, right? So it's really nice and healthy to see price just taking a breath and retracing to the downside. And what's even better than this is that you can always capitalize on such moves. So on the weekly time frame, I see a very clear draw on liquidity, which is a sell side created slash this weekly fair value gap. Now enough on the weekly. I'm gonna go on the daily to see if the daily time frame support this idea of sweeping sell side slash weekly fair value gap. So within this uptrend, okay, on the daily time frame, so this was the last high created, the last low created, break of structure, and then an aggressive push to the downside, marking the first change of character within this push to the upside. So you see how the daily time frame on June 10 closed well below this sell side over here. Now, of course, we couldn't go short over here because you want to wait for a retracement of all of the displacement to the downside. And the retracement was to fill out all of this imbalance over here and tap into a daily order block. Now, this becomes actually nice and interesting. What happened next? You all noticed the IPO for Tesla and all of the hype that was created on the media. I'm not going to get into that, okay? But what the price is showing me that this could be another potential higher low. This could be a potential, sorry, lower high. This could be a potential of the next lower high created and engineered from the markets to push lower. Now, notice what happened over here. After price took the daily order block, this was the gap, okay? If today still managed to close below the gap, then all of the scenario will be confirmed. Okay, so if I scale down into the hourly time frame, this is what I see. I'm going to use the 6-hour time frame for this example, and I'm going to show you. This was the break of structure, bearish break of structure, retracement back into the OTE, optimal trade entry level. But in case there's still another reason for price to push higher, it's still confusing a little bit. This push to the downside, a retracement back, and a close below the sell side marked the bearish break of structure. So in my opinion, price is heavily bearish. So again, I want to see the day still manage to trade below this gap. But for tomorrow, this is what I'm going to be paying attention to. I'm going to be paying attention into this 6-hour bearish fair value gap aligning with the candle open slash close price over here. And if you take a Fibo level from this wave to this low to this high, here's around the 50% Fibo level from this wave aligning or engineered actually within this daily order block, all happening within this previous bullish gap, which can turn into bearish gap over here. On the 2-hour time frame, just for the visual to become a little bit better, price already created a buy side and a sell side. So what I think will happen is a little bit of accumulation inside of this range, and tomorrow maybe on silver bullet, which is 9:30 stock market open, or even in London, or whatever time this happens, I think it's going to be important. An accumulation, manipulation into the 6-hour imbalance slash the area of interest that I mentioned, and at this level I want to see a very nice reversal pattern on the lower time frame for a potential for a continuation lower into at least the sell side. If I took a trade from here, I'm not going to hold it down into the weekly fair value gap because this market is crazy and anything can happen and a lot of manipulation can take place. So I'm going to use this as a bearish break of structure, and then I'm going to wait for a retracement if it's offered, and then the next trade would target the weekly fair value gap. But if I was able to take any single short from this level, I'm going to be targeting the sell side, which was last week's low or June 11's low. So I really thought that this is a very significant structure and trade in case price showed us. Otherwise, I wouldn't be talking about it and wasting 10 minutes of my update for it. So you can keep it under your radar. It's up to you if you trade this level or this asset, sorry, or not. But once I include a setup, it's really worth focusing on. So especially if you are observing price action from a higher time frame point of view, a little bit of swing point of view as well. taking hourly confirmation and hourly change of character, combining them with the daily. This is going to be really helpful for you to observe. So this is actually a longer update than usual, but I thought that it's really interesting times to talk about those assets. So yeah, with that being said, I think that's it for today. I hope you find some good value in those updates. I'm gonna be making my trade recap for June at the end of this week after I'm done. And yeah, let me know in the comments if you're trading those assets, if you want me to cover any other asset, or maybe if you have any other opinion on price action moving into this week. So yeah, I hope you enjoyed once again, and I see you in the next update.